Hi guys, and welcome to Swing Trade for Income on the 26th of February 2010. Today we're looking at the daily chart of AK Steel Holding Corp, which has a symbol of AKS. As you can see, most recent price action went down and found support at the $20.40 area, finding that support from horizontal price action and also from this 100-day period moving average, and then bounced well off that to close near session highs, forming what we call a piercing line reversal pattern. Basically all that means is prices open lower and close above the midway point of the previous day's candlestick. Again guys, don't get too technical. As long as it closes roughly at the midway point of the previous candlestick, that's good enough to give us the definition. I also wanted to point out it looks like we may have had some climatic volume on this red down day, so that suggests to me that the sellers may be flushed out of this stock for the time being, and we may be ready to see a reversal back to the upside, given that this pattern did form right at the support area of $20.40. Okay, in terms of some basic money management, I would be looking to place my stop below the 100 period moving average, that being 2036. So we'd put our stop in there at 2023 to give ourselves a little bit of wiggle room, and I'd be looking to exit half of my position back up at this high, the $20 at the $23.50 area. So I'd exit half of my shares at 23.47, just so we'd get a bit of an easier fill than 23.50, and I'd put a trailing stop on the remaining half of the position. Okay guys, just remember that this stock is a high beta stock, which basically means it moves at a higher rate compared to what the market does. For example, if the market's up 1%, AK Steel may be up 2% or 2.5%. So you don't need to trade a huge amount of size to do really well out of this stock. So just remember that. And also, another way to enter this trade, if you want to be more conservative, would be to scale in. It is close to the 200 period moving average, as you can see. So what you might want to do is only buy half of your position, so you are in the stock if it does continue to move higher. But quite often stocks do tend to pull back to their 200-day moving average. So if you only buy half, you could buy another half if it does move back to the 200-day period, knowing that if it goes much below this 200-day period moving average, this green line here, you're out of the entire position. So that's just an alternative way of getting in, just to scaling in by maybe 50% or a third, however you want to do it, and then buying the other half or 2/3 of your position back down here at the 200-day period moving average if it comes back to that level. That's just a way to reduce your risk and an alternative, a bit more conservative way to enter a position. But on how you do that, that's up to you guys. So just wanted to bring that to your attention. Okay, I hope everything's going well and you're putting a few good trades on, and we'll speak to you again soon. Bye for now.